Tax season is here. Many Americans usually get stressed out this time of year, but this year we have to contend with the fiscal cliff and the changes that it brought for our tax codes. Today I'm joined by Michael Keating of InnerHarbor Advisors. Mike, thanks for joining me today.
Thank you, Remy. Happy to be here.
Well, tax season is officially here. We only have less than 2 weeks until that April 15th deadline. And the AMT in particular, the alternative minimum tax, means different things to different people. So as a refresher, could you tell our audience what it is and what changes it will be bringing for the filing this year?
I think the most important thing to keep in mind is when we're talking about federal taxes, there are actually two different tax codes in this country. There are two different tax codes. The one is the one that you probably hear about that gets the most press, the one that's got 8,000 pages, and when you stand it from Florida to up here, that's how high it would be. And the other is the AMT, the alternative minimum tax. And the AMT is actually a much simpler tax code. And for every person who files taxes, whether you're having it done professionally or you're doing it yourself, you're going to have to figure out what tax you owe with the traditional tax code and the AMT. And whichever amount is greater is actually the tax that you pay.
And Mike, if you could tell us a little bit about how this affects housing, in particular with mortgages and interest.
Yes. So when it comes to the regular tax code, there are a number of different deductions that you can take. It's a lot more complex. The AMT is actually very simple. So one of the things that you can take as a deduction is home mortgage interest. That's one of the keys. Is home mortgage interest is something you can take on both the regular tax code and the AMT.
And moving on to retirement plans, usually investors and consumers have until April 15th for the previous year if they want to contribute to their traditional or Roth IRAs. But how does this change the retirement plan?
Well, this is something that we talk about on this program a fair amount, retirement plans. And besides just saving for retirement, when you contribute to your retirement plan, you are reducing the amount of income tax that's due in that year. And the AMT, again, it's a very restrictive tax code. Mortgage interest is something that can be taken as a deduction. Also, contributions to qualified retirement plans are something that's not figured into AMT.
And speaking of contributions, Mike, if you could tell us how charitable contributions or donations work in this case.
Yeah, so you're not necessarily saving money when you donate money to charity, but that is also something that's recognized by AMT. That is going to be a reduction in the tax that you're going to owe. So to quickly do a rehash of the three allowable exemptions in AMT, it's home mortgage interest, it's contributions to a qualified retirement plan, and also charitable deductions, charitable giving.
And Mike, last but not least, if you could tell us how this affects property and state taxes.
Sure. So again, we're talking about two different tax codes here, the federal tax code as we know it and the AMT. Things that are not allowable in the AMT. Property taxes are not allowable, and also state taxes. State taxes are not a deduction. So AMT is very narrow, and also with the fiscal cliff negotiations, the AMT is here to stay. So if there's one message I could give to our viewers is that if you're in AMT, it's now indexed for inflation. So if you're in AMT, you're most likely going to be in it for a while. So grin and bear it, get used to it, and be aware of what's allowable and what's not allowable.
Mike, I think it's very important to emphasize that one last point. And given that tax season is here, I'm sure that you've been dealing with a lot of clients. What has been some of the most common questions you've been getting, and do you have any further tips for investors out there?
So a lot of the questions cover this, what we're talking about with AMT, and a lot of clients are, especially first-time clients, are surprised that there are two different tax codes in the U.S., and it's a good time to review what is actually allowable, and before April 15th, or actually before you file your returns so if you file an extension, it can be as far out as October 15th, you can make contributions to certain retirement plans, and it's often your CPA that will inform you as to how much money you can put into your retirement plan. It's a great idea all around.
Okay, Mike, well, thank you so much for a refresher on the AMT, and thanks for all your insight today.
You're welcome. Good luck in tax season.